Good morning. Welcome to the E3 Live Market Report. I'm Pat McClatchy. Thanks for joining us today with the Ag Market Network. We'll be going over exports when they come out in just a few moments. Let's look at the markets overnight. Starting with cotton. The cotton market right now is down 23. Soybeans are pretty close to unchanged. In July, 982. We've got the corn market down 2.5, and we have the wheat market up 1. So looking at last month, it was last month, but also last week, the numbers that came out, the cotton number last Thursday that came out was 124,200, a very good number. Looking for a little bit less than that when these numbers come out in about a minute. Soybeans, 433,400, probably considering about the same there. The corn market, about the same. It had 832,500. Wheat had a very bad number, a negative 449,200. Surely we're looking for a better number there. Today we're going to go over these exports as they come out. We'll look at what's happened over the last week, and then we're going to talk a little bit more about the dollar. We've talked a lot about the dollar over the last month or two. We want to talk a little bit more about what could be about to happen. Is this a big trend in the dollar or just a correction? We'll talk about that in just a few moments. Looking at the markets again, as we're just about to get the numbers to come out. Cotton down 22, beans unchanged, corn down 2.5, wheat up a penny. And the numbers, we have jobless claims numbers coming out. That's going to be first up, and then as soon as we get those out of the way, we'll be getting our export figures. Let's see. Still no reaction in the markets. Here we go. Cotton, 19,800 bales. That number is really not a bad number considering there's really not a lot of cotton out there in the U.S. For the high quality cotton. So we're not really expecting the kind of number we had last week. Reaction to the market actually has backed off some. It's down about 35 right now. Looking at next, soybeans, 338,900. Reaction of the market in soybeans, we're right now unchanged, which is unchanged from where we were just before the number came out. Corn, 841,800, and that number is in line with last week's number. The corn market right now is down 2.25. So it's about where it was before the number came out. The wheat number that came out, looking at the headlines of another negative number, not good for wheat, a negative 148,200, not as bad as last week, but still a negative number. And the wheat market right now is up about 0.75 cents, so we're slightly lower than we were. Let's look at the breakdown here as it's come out, starting with cotton. Sales of 19,800, that's down 84% from the previous week and down 73% from the prior 4-week average. Again, I got to tell you, a small number now is not that negative because there's not that much cotton left, not that much cotton available. Looking at the breakdown, South Korea took 9,100, Turkey took 4,900, Thailand took 3,800. China canceled a small amount of cotton, 4,200 bales. We had new crop sales of 13,600. And that's what we've got there. Right now, the cotton market is down about 44 in July, down about 34 in the December. Going next to soybeans. Soybean number was 338,900. That's down 22% from the previous week, but up noticeably from the 4-week average. The best buyers, well, they just got listed best buyer unknown destinations, 170,000 metric tons. Mexico took 67,800 metric tons. Indonesia took 38,400 metric tons. And I'm not really seeing cancellations. Okay, let's look at that market. The bean market is up a penny. It was unchanged just before the number came out. Strengthened just a small amount. Next, corn, net sales of 841,800. That's up 1% from the previous week and up 15% over the 4-week average. Taiwan took 277,900. Mexico took 203,300. And Japan took 163,400. Looking at further at the breakdown, China did cancel 83,000 metric tons. That's the main cancellation that we saw. Still a good number in corn. Now wheat, sales of 141, a negative number here. The reductions of 148,200, and that's up. And this is odd to say, but that's up 67% from the previous week. But still a negative number. Breakdown, Italy took 20,800. Japan took 13,800. Liberia took 5,900. And China canceled 109,000 metric tons. There were other cancellations also. Cancellations from Guatemala, El Salvador, and Mexico. So reaction back to the wheat. Wheat right now is unchanged, so it's sold off a penny from where we were just before this number came out. So let's look at what's happened over the last week in these markets. Corn market is at a 14.5 cent range, a low of 355, a high of 370. Right now, corn's at the corn market at the moment is at 364. So we're in the middle of that range. Looking at news, on Tuesday we had a reversal in the market. We made a new long-term low and then reversed and closed up on the day. That was considered a positive thing. Also, the dollar has been weakening, and that has been another thing that would be considered positive for the market. And we've got a crop report coming out next Tuesday in the market, not just in corn, but other markets. We'll see some position squaring going into that. Seasonals. The seasonals normally for corn during the month of May are down. Targets. Old crop targets looking at 375 to 380 right now. July corn is at 364. New crop targets of 390 to 395. Right now, we're looking at December corn at 380.5. Now, one thing I've not been doing, and I think it's about time we start doing it, let's look at the downside targets. Old crop in corn, 345. New crop target, 360. That's what some analysts are talking about to the downside. So that's it for the corn. Looking at wheat, the wheat has had a range of 28 cents over the last week. A low of 488 3/4, a high of 460 3/4, and right now the wheat is trading at 479. So we're in the middle of that range also. And news in wheat. Tuesday we saw a bullish reversal, just like we did in corn. Made a long-term low and then came up off of that. The weather has been improving with more rain through our wheat belt, and also, as we mentioned in corn, the dollar has been weakening. The seasonals, normally the seasonals for wheat, May is always an interesting month for wheat. Normally you see a bounce in the first part of the month, and then you start a pretty good sell-off from mid-May all the way into mid-June. Targets, July wheat, right now trading at 479 1/4, looking for 490 to $5 to the upside, looking for the possibility of 450 to 460 to the downside. So that's corn and wheat. Going to beans. We've seen a 33.75 cent range over the last week in soybeans, from a high of 9.95 to a low of 9.61 1/4. Right now, the beans are trading at 9.82. That market is also in the middle of that range that we've seen over the past week. Right now, soybeans are unchanged on the day. Some of the news: technically, the market is looking better. We've taken out some technical moving averages. Soybeans look better than beans and wheat. Than corn and wheat. It's been making progress to the upside. Also, the dollar weakness has been supportive, and the oilseed markets internationally have been stronger, and that's been a boost to the market. Reminder of next Tuesday, we have our crop report coming out. We're not looking for any shocks there, but we don't think that the carryout is going to be reduced. Seasonals normally top out in May. In soybeans, targets, old crop target of 1020 to 1040, new crop target of 980, and it's possible to see, I think, the November soybeans that are at 957 may even test the 920 level to the downside over time. So that's it for the bean market. Let's go to cotton. We've seen a 241-point range in cotton over the last week. Right now, the cotton market has continued to drop. It's down 57 on the day in the old crop. So that range is probably even wider, closer to a 300-point range, and we're on the lower end of that right now. Some of the news here: continued good demand with limited supplies has been the main positive. Other countries are also tight with their available cotton in the higher quality category, with the exception of India. India, as many of you know, it turned out had a smaller crop than they originally had thought, and India has been very careful about releasing the cotton they've got. They don't seem to want to do anything that would be disruptive to the market. Also, the weakening dollar is a factor. New crop is a different story. We've actually got two markets. Typically, we've got old crop and new crop. Old crop tightness should provide good support under the market on sell-offs. The new crop, things have changed somewhat over the last week. They've had very good rains in West Texas, in that entire 14-county area where they grow most of the cotton in the country. Very good rains of anywhere from a minimum of 2.5 inches up to as much as 8 to 9 inches of rain. And so it looks like they're going to get off to a very good start. And a wet spring is very supportive for cotton out there, especially the dryland cotton, because that goes a long way toward making a crop. In addition to that, those people that irrigate their crop, they're able to save water to be able to hold in reserve for later in the year when they might need it. So seasonals, typically the seasonal shows, as we looked it up this morning, it bounces into mid-May to the upside, and then it sells off through summer. Not exactly following the pattern of that at the moment. Targets, old crop cotton could get as low as 62 to 64 to the downside, could get up as high as 68 to 72 to the upside. Right now we are at 65.34, so we're in the midst of that range, maybe on a little bit on the lower end of it. New crop cotton right now trading, December cotton is trading at 65.33, expecting that to get down maybe as low as 60 to 62 and as high as 67 to 68. Things change some for new crop cotton with this rain, and it's probably going to make it hard to see any kind of a substantial rally in the December cotton. I think even in the July cotton, some of the sell-off we've seen in recent days have to do with this rain in West Texas. Even though that's more of a new crop thing, it's affecting the old crop also, and probably causing some fund liquidation in the old crop. They're starting to bring the market back down some. Let's talk about the dollar. We've talked about the dollar a lot. I know that, but it's so important to the market. And quickly to repeat, when the dollar is strong, as it's been over the last year, it's negative for commodities in general. And you can look at the charts and see that. When the dollar goes through a period when it's weaker, it has a tendency to support commodities. Now, it doesn't mean that every commodity takes off and has a dramatic rally. Some markets that have weaker fundamentals might not rally a lot, but they can hold when they normally might be selling off. So right now, if you look at where we are, and as we look at analysts and what they're saying about the dollar, the question is this: have we seen a major top in the dollar, and are we about to see a substantial sell-off over time? We rallied the dollar for a year. Are we about to see something like that to the downside? I don't think that's the case. I think what we're looking at is maybe a 2-month drop in the dollar, and with that, some support in commodity prices. And there's a reason that we're interested in that. We'll talk about that in just a minute. But looking at this, March the 13th, the dollar was just a little over 100. Then it sold off some. It tried to rally again. April the 13th, it got to 99.99 and topped out. And since then, we've been selling off. Right now, the dollar's up 33, but it's at 94.42. If you look at the seasonals for the dollar, and it's hard to believe there's a seasonal for the dollar, but there is one. More research puts it on their site. The market has a tendency to sell off into somewhere in the area of the third week, the last half of May is what it looks like. So we're kind of in a time frame where this market naturally would be seasonally selling off anyway. It's just struggling right now. We're starting to see it move down. So here's why this matters. It matters because if you're a farmer and you're looking for an opportunity to be booking some crop, you could have in front of you in the next couple of weeks an opportunity for higher prices that you might not normally see. It happens in a time of the year when you're busy planting your crop, but it really is important. It really is important to put together a plan to be able to possibly take advantage of markets that might rally influenced by a weaker dollar. Because, I think if I had to guess what could happen with the dollar, we sell off for the next couple of weeks. Commodities get a little bit of a boost out of it to the upside. Then we probably rally back to the highs again, looking on out, and then we see what happens. We see if this is a more meaningful high then. So, very important to keep your eye on these markets and be prepared in case you do see a commodity rally caused by a weaker dollar. We need to be able to take advantage of these opportunities. That's really it for the day. Thanks for being with us on the E3 Live Market Report. Join us next Tuesday, about 15 minutes after the crop report at 11:15. We'll have a review of the crop report. Then the next day on the 14th, we will have our Ag Market Network monthly cotton teleconference. Make sure that you join us for both of those programs. Thanks for being with us. We'll see you next week.